10 years ago was the right time to buy Bitcoin. 15 years ago was the right time to buy Bitcoin. But it's always the right time to Bitcoin, because if you look at the power law gives you a very good sense of what that means. Like, for example, if you join today and you wait other 15 years, right? So if you double the time of existence of Bitcoin, so in 15 years from now, you basically get two, that is time that you're doubling, right? 2 times, 2 to the 6. We're running that growth to in time to the 6. 2 to the 6 is 64. 64 times. You tell me where you get 64 times your investment using anything else. You don't get it. Let me explain this concept of scaling variance. That people hear this term and they get turned off. It's a very, very simple concept. The concept is, take a child, for example. Look at how a child grows. Those the child grows, in the beginning, we have huge, big heads, right? This is why we are so cute. And there are reasons, right? There are reasons because of that. Because the brain needs to be big from the start, right? To do a bunch of things, etc. And so this is why we get born with these huge, big heads. It's the biggest that you can have and still being born normally. But the child grows, and its limbs, every single little part, right now, it goes through a period where other things are happening, very fast. But in general, it grows proportionally. So scale invariance means everything goes up proportionally. What is proportional for Bitcoin? The change in price, when looked from a scale point of view, and what do I mean for scale, right? In science, we have this terminology. It's not a difficult concept. Scale means 10, 100, 1,000, 10,000. So if you're looking at the price of Bitcoin, not when it changes from 10 to 20, 25 to 100, 100 to 125 to 100. But if you look at how Bitcoin changed, every time it went up by a factor of 10, and then you compare the time, you can see that the change in this scale is proportional to the change in time. In other words, it took like a few days to go from, a fraction of a dollar to $1. It took a few weeks to go from $1 to $10. It took several months to go from 10 to 1,000. The power law should give you a lot of confidence, right? Now, every investment, of course, has risk, Bitcoin included. When you look, you never look at risk by itself, right? You look at the ratio between rewards and risks, right? Risk and rewards. So the risk here, if you understand the power law, it's nobody can say it's zero, because you should go to jail if you say that, but it's very, very, very small, in particular with all the other things that are happening, the institution adopting it, nations adopting it, and so on and so on. So the risk is very, very small. One maybe can calculate, maybe it's something that, me and Fred and somebody else can come up and compare the risk of Bitcoin. Now you can do it with many different ways, the Sharpie or many other things. We can calculate it, but I will say that it's very, very small. The rewards are immense, because there are no, even now, of course, yes, in the beginning, because of that factor, remember I told you, it's like you're dividing by a dampening factor over time. That is where the diminishing returns come. 10 years ago was the right time to buy Bitcoin. 15 years ago was the right time to buy Bitcoin. But it's always the right time to Bitcoin, because if you look at the power law gives you a very good sense of what that means. Like, for example, if you join today and you wait other 15 years, right? So if you double the time of existence of Bitcoin, so in 15 years from now, you basically get two, that is time that you're doubling, right? 2 times, 2 to the 6. We're running that growth to in time to the 6. 2 to the 6 is 64. 64 times. You tell me where you get 64 times your investment using anything else. You don't get it, okay, in 15 years. It is, for a young person in particular, is nothing, because I can assure you, if you are in your 20s or 30s, 15 years fly, okay? They fly incredibly. Like, in 15 years from now, you say, where the heck these 15 years went, okay? And at the same time, you look at your wallet, your Bitcoin wallet, and you are okay, because 64 times your whatever you invest in now. I suggest, in particular to the young people, to do a little bit more aggressive move, because if you start, you have to be also honest. If you have only $300 a month that you're putting on Bitcoin, you should do it, right? You do DCA, do this on a continuous basis. But to be honest, yes, you will be in a good place in 15 years, but you're not going to be a millionaire. And we can try to do the calculations. I think I did it a few times. You're not quite ready for retirement. One of the things you can do, please understand what I mean here. I'm not trying to tell you to do anything crazy or anything absurd. You can use the power law to identify these cycles. Now, one has to understand why the power law is based on thousands of data points and very solid principle. What I'm telling you next is based on what Bitcoin did in terms of cycles, because there are two behaviors. There is this long-term trajectory, and then there are these cycles. These cycles are very predictable. They are happening every 4 years. The top happens at a certain time, etc. So, but you understand that making stat using 3 data points, it's almost irresponsible. But it's all what we have. Okay, so under the assumption that these cycles continue, and I think I have also very solid scientific arguments why they continue, that we can discuss now another time, or people can read more of my work. If this cycle continues, then you can try to be a little bit more aggressive. And what do I mean with that? In a very well thought way, decided ahead and say, okay, I'm going to take 10%, 20%. I will not go more than 50%. 50%, I think it's a pretty aggressive and kind of balanced approach. But 10%, nothing wrong, okay? You take 10% of your asset, sell it when it's red. And how did I get this chart? I got this chart by taking deviations from the power law. So the power law basically will be the red flat line. So it's 0 because I'm taking it off, right? So it's everything relatively to the trend. So you take and draw the price of Bitcoin, and you can identify very precise areas when it's a very good idea to buy, that are this green area. We can do even better. I can have other ways where we can almost zoom in on the bottom itself. But even if you just do it in a very simple way, where you say, okay, anything below this amount of deviation, it's a good buy. Everything above, it's a place where maybe I should take some gains, right? I should sell a little bit of my Bitcoin with the idea that you want to buy back at the bottom, right? You save it, you don't spend it, you don't do anything stupid, you wait until you go back in the green area. If you do this, now we are not talking anymore about 64. I did a calculation that is an extreme calculation, understand it, right? Like, what is the best possible scenario? And then you have to go down from that and multiply by some kind of factor, right? Alpha, 10%, whatever, that explain both your commitment to this approach and inefficiency, because we're never going to get 100% right. But if you got it 100% right, again, based under this assumption that everything repeats the same, we are talking about 1,200 pair. That is how much Bitcoin has left if this cycle continues, okay? So now, of course, you're not going to get 1,200. Do it. What about 50% that? What about 10% that? So in other words, you don't get any more 64 if you are a little bit more aggressive and you try to understand these cycles, and you do it with awareness, with carefulness, without doing anything degen. Maybe you get 100, maybe you get 150. But again, in 15 years, it's not crazy. It's completely crazy in terms of investment. There is nothing like that.